right, what's up, everybody? Happy Thursday. This is the morning show, Stock Market TV. Spencer, Steve, JC with you as we are pretty much every day. Good morning, chat. How y'all doing? Having a good day so far? It's early. We got some stuff to discuss, so let's get right to it. Callie Cox is the guest. She'll be on at 9. We'll have Sean McLaughlin on at 9:30, and that is the plan for the day. So let's go. Where's my intro?
Dude, I was watching this video of Greg Maddux. I tweeted it this morning, and they were just telling a story from back in the 90s. And Maddux was like, when Bagwell comes up against the Astros, when Bagwell comes up, don't throw him inside. We're not going to throw him inside. He talked to the catcher. We're going to keep him away. And then right before Bagwell came up to bat, and this was like late summer, when Bagwell came up to bat, he tells the catcher, he goes, we're going to go inside with him, right? And the catcher's like, all right, I guess. Boom, goes inside. Bagwell hits it freaking 350 feet over the left field fence. And the catcher's like, what the hell was that all about? He's been saying all along, don't throw him inside. Don't throw him inside. We're trying to go away. We went inside. He hits a home run. What the hell? So 3 months later, they're facing the Astros in the playoffs, facing Bagwell with like 2-3 men on base. Like, this is like a really important. He throws him 3 changeups away, strikes out Bagwell, and he goes to the catcher. He's like, remember 2 or 3 months ago when we went inside on him? He knew that he was going to face him in the playoffs, and Bagwell would be looking for that inside pitch.
Oh, that's
he was
awesome.
thinking like 3 months into the future.
I've heard similar stories. I don't know how true they are about Manny Ramirez, how he would intentionally strike out and look stupid in April if he knew he might face you in September, October.
Dude,
that's awesome.
I mean, the chess game to give Bagwell a home run with an inside pitch so that he's looking for that in the playoffs 3 months down the road. I mean, damn, that is some psychotic shit right there. That is,
yes.
Damn.
Was that like the best pitching roster in baseball history, the Braves back then?
Yeah, man. Glavine, Smoltz, right? What was the other guy? What was his name? What was the fourth guy?
They had the crazy guy,
Righty.
John Rocker was there for a while too, wasn't he?
I know. But what was that fourth pitcher?
I don't know if there was a fourth guy.
Yeah. The other was. He gets lost in translation because the other guys were all Hall of Famers.
I don't know if I knew about this.
What was his name?
Mysterious fourth man.
Was it Al Leiter?
No.
Al Leiter.
Oh, Glavine's the one who went to the Mets. That's right.
Glavine was at the Mets before.
No, after.
A lot of Mets fans hate him.
He went to the Mets after he was on.
Oh, he went to the Mets after.
Can we move on?
Yes.
All right.
By the way, the gentleman's name was Steve Avery. Was the pitcher. Oh, there you go. Chat's in there. Yeah, Steve Avery was that fourth.
Sorry, Steve Avery.
I just thought that was awesome. It's on my Twitter stream, guys. Check it out. We got the Dow futures doing absolutely nothing this morning. Above 41,000, by the way. 41,000 for the Dow Jones Industrial Average. S&P 500 futures pretty much flat today. 5650 for S&P futures. Wow. NASDAQ 100 futures trying to get back above that 20,000. Awfully close. Up another 55 handles this morning. That's about close to 1/3%. Bonds down for the first time in a minute. Bonds down 0.75%, down towards 124.14 on the 30-year. That's a big move, 0.75% to the downside. Crude oil flat on the day, down to 72, while copper continues to hang in there. 416 for copper, down about 0.2%. Gold down 1/3%, hanging in there near all-time highs, just under 2,600 an ounce for gold. Silver hanging in there, nice, up 0.5%, just under $30 with the VIX, at 16. And of course, over in funny money land, you got the Bitcoin big move yesterday, 61,000 for Bitcoin, flat this morning. Ethereum also flat, 2,600 and change. Solana flat, 144. Binance up 2%, 580 for Binance. Total crypto market cap, Spencer Israel, 2.1 trillion, with the Bitcoin dominance still above 57%. What stands out in the futures this morning?
Well, On the crypto thing real fast, we talked a lot about crypto in some internal meetings yesterday. I'm feeling a little better about it after just hearing like Louis, because Louis was like, gotta kind of just wait and see, right? At least like, but he wasn't panicked, right? So I appreciate like his sentiment. He kind of like calmed me down a little bit.
I like this. I like that riot trade, and Strazza jumped all over, and it's like, boom, breakout multiplier. Let's fucking go. I was like, all right, let's go.
It went out. 2 trades went out yesterday.
2 trades went out yesterday, but particularly in the old blocking chain. So I was listening to New Kids on the Block this morning. Got inspired by the all these new kids on the old blocking chain, and so I was listening to New Kids on the Block. I didn't realize that both Donnie Wahlberg and Mark Wahlberg were both on New Kids on the Block.
Yeah. Yeah, hell yeah.
Donnie I knew. I didn't know Mark was in there too. I think he was in there for like a hot second though. He wasn't like an OG, was he?
Those were the back in the days before Marky Mark.
Oh. I've had this song in my head all day.
So the altcoins are making some moves out here.
Which ones? Which ones?
Finally.
What is these altcoins that you speak of?
I'll tell you.
These altcoins that one speak of.
And this is something that we haven't seen, right, in a while. This space has been dead. It's been Bitcoin, Solana, and that's about it. So just over the past 24 hours, we got Injective up 9%, Chainlink pushing 10%, Optimism 6.5%, the Jasmy 5.5%, Stacks 11%, Bonk is up 5%, Theta is up 11.5%, Render's up 10%.
Popcat's up 25%.
So the altcoins are moving.
Excuse me, 27% for the Popcat.
I don't look at your crap tokens.
Crap tokens. You were just talking about the Bonk.
I'm in the Bonk, so it's on my watch list.
Oh, so because you're in the crap token, then it's okay to talk about. But the tokens that are up way more than yours, that's not okay. Is that what you're saying?
Your tokens are below Coinbase's line. I couldn't add them to a watch list if I wanted to.
Oh, and Bonk is okay. Are you really gonna come with me with this nonsense?
So I want to show you charts.
I have such a boomer. By the way, can I just tell you what a boomer you are?
No,
with your
don't spoil it. No, I want to play a game. We have mystery charts for you. We're gonna play a game.
Oh, I was wondering what this was. Okay.
This is would you buy this?
Okay, let's go.
All right, run the bumper for the new game show.
Oh, it's a new game show. Ooh, I like this.
Aren't you prepared, Spencer?
There is no bumper for the new game show, but I have a mystery chart that I was confused about.
Oh, that would have been so sick if we had a bumper for the game show. Okay, so would I buy this chart? The answer is yes. What is this? ARC? It looks like ARC.
Show them the next one. Keep guessing. It's not ARC. No.
This is not.
There's 2 up top, Spencer. Yeah.
Oh, sorry. All right, sorry. This is the first one. Sorry.
Yeah, I like buying a breakout. Why wouldn't I?
The first one. This is the second one.
But you knew that already, which is why you brought it.
So you would buy it. You would buy these.
I would buy a breakout in these. Yeah, of course.
All right. Now you get a couple guesses. Go ahead. Go ahead, guys.
I mean, these look like some sort of like, $13 billion, shitty software, or like an ETF of shitty software stocks. Like, how close am I?
They do, don't they? They really do. Spencer, would you like to embarrass yourself too?
Could be a biotech. It could be a Chinese internet. It could be China in general. Maybe not Chinese internet. It could just be a China play. That's a possibility.
Yeah, I would lean towards China. I don't think it's tech, because like there's nothing that's like no crappy growthy tech stock is still $100 a share, right? Unless they did like a crazy reverse split. So
these are funds. These are ETFs.
Oh,
these are ETFs.
Sorry.
Are they ETF? Are they baskets of these shitty? Are they like crypto miner baskets?
This went even better than I could have ever imagined.
All right, give it to me.
Custom index. You know these funds well. So we had Dumpy.
This is not China. This is not K-Web.
ARC as a guest. We had China.
No, this is not K-Web. This is not K-Web.
So you guys are thinking all of the most speculative assets you could name. Actually,
that's what they look like. I know what they look like.
Great, they do. In reality, these are some of the safest assets.
Oh, chat's got it.
Known to man. Not quite, but the chat is very close.
Oh,
this is
that's close.
So the first one is the LQ. No, the first one is the AG.
So this is the total bond fund.
Yeah. So this is the iShares aggregate bond fund. There's a little bit of treasuries in here. There's a little bit of investment grade. There's a little bit of high yield, a little bit of everything. Diversified bond fund. And the next one, these are investment grade bonds. These are the safest, highest rated corporate bonds in the world. And they do, JC, to your point, look like ARC funds, but they're not. So you are a buyer of bonds, my friend. Congratulations.
Yeah, I'm good with that.
Okay. It was a good game, right?
Yeah, it was a fun game. It was as good for you as it was for me?
We should do that more often. That was fun.
Yeah, that was a blast. Can we get into that Canadian Railroad that you slipped in there? I like that.
Hold on. But the point is,
Yeah.
These bond funds look like ARC funds right now. They look like biotechs. These are fresh trend reversals. They look like some of the most speculative funds that we have on
when bonds got slaughtered, all these other things got slaughtered. So that makes sense, right?
HYG looks great too. I mean,
didn't all these speculative growth stocks that look just like this get slaughtered when bonds collapsed?
And I'm not making this point as you should be defensive. Bonds are, entering new uptrends. I think it's actually, if you were to really consider the intermarket implications, I think it's actually probably the other side of that more so than it is defensive. If all of these bond funds are entering new uptrends, right, and completing these primary trend reversals, what does that say for interest rates? We are
probably not higher.
We're definitely entering a falling rate environment. You could argue we've been in one all year, right? But it probably accelerates, or at least exists over longer time frames in the future, now that we have all these primary trend reversals. So if rates are going to keep moving lower, we wrote about the dollar yesterday. I mean, dollar is on the ropes here. I'm talking about the Dixie. That breaks down too. You got lower rates, lower dollars. I'm not trying to point this out as a defensive call at all. I think that would be bullish in a market.
So here's the question. If rates are collapsing and the dollar's collapsing, in theory, that's good for equities, right? And I think in the short term it is. But at what point would a collapse in yields and a collapse in the dollar, at what point do you say, what the hell does the bond market know that we're not seeing, right? Like, where is that line? Like, how do you think about that?
I think it's a lot lower than where we currently are.
That's what everybody keeps telling me, for the record. That's what Mark Newton said. That's what Tom Lee said. Remember? Oh, you weren't there in New York in December, right? Were you there? Spencer was there.
No, I wasn't there, but you told me about what Mark said, and I do agree. I think that if you look at a chart of just like US 10s right now, and let's keep in mind, the effective federal funds rate hasn't changed for a long time, but something like US 10-year is, I don't know, 120 basis points off its highs, right? So they're going to move before the Fed, and the Fed's going to come out and cut a bunch in the future. I would imagine you got the 10-year a lot lower than it currently is, probably in the 2s. And I don't think that would signal any sort of, emergency or stressful situation for the economy. I think it would just indicate a Fed that is now cutting. Rates have come down this much, over 100 basis points in 10s. We haven't had our first rate cut for the cycle yet.
I got to tell you, bro, these 2s, though.
Yeah.
Right? I mean, what is it? The 2s are what the 10s are what the market thinks the Fed might do. The 2s are what the Fed is actually doing. What's the old saying? Something like that, right?
As you move down the line into shorter expirations or shorter durations, it's going to look more and more like Fed funds rate. Yeah. So the 2 tracks the Fed funds rate pretty well, I guess.
Closer than the 10s. And have you seen the chart of the US 2-year note? It looks like that chart that you just showed, actually. Right. Well, the 2-year note, the notes themselves look like those charts. Look exactly like those charts, as a matter of fact. So if those 2-year yields are rolling over like that rainbow that you just did, then yeah.
I've never bought bond funds in my life, so
stop.
This is never.
You've never traded the TLTs?
I bought bonds like directly, which I just kind of wanted to learn how to do.
You ever traded a TLT?
I've traded calls, but I've never put it in my account and been like, sweet, I'm going to get a dividend.
When I go back and I look at some of my greatest trades ever,
Yeah.
TLT was in there multiple times.
No, I'm trading TLT calls.
It was also the worst trade I ever put on also, which is why I moved to California because of that bond trade.
So can I tell you the way I'm doing this? I'm buying the shares too, because I do want these beautiful yields that these funds offer. But I'm also going to buy some calls. I'm going to go out a while. I'm going to go way out. I'm going to give them like 6 to 12 months. I'll probably do that today or tomorrow.
All right.
You like them?
No.
No bonds for JC? You own bonds, though.
I want to work on a bond portfolio where we're always long bonds and we're just changing the duration. This is something that we've been talking about. Jason and I are talking about it behind the scenes. I really like this sleeve for a strategy. I'm going to put my own money in it. I like an always long bond portfolio.
Always?
Always long.
It would have been a disaster this cycle.
No, it wouldn't have, because you would own the short duration. So you're getting 5% or something like that.
Yeah, but no, you would have lost a ton of money in the short duration. What are you talking about?
You would not have lost a lot of money. You would have made 5%. What do you mean?
So you have to hold them to expiration then?
No, you hold the TLT, you hold the ETFs.
You're talking about like Shy, like one of those things?
Bill.
Oh my God. Oh, that's so boring. Okay. Yeah.
Fine, but then on a year where bonds rip and you own the long duration, now you're going to return 25% in a year where maybe your stock portfolio is nowhere near up 25%.
But even if you were in like the 1 to 3 year fund, the Shy, from I don't know, the last cycle high to the last cycle low. Wow, I guess it's only down 8%, but still to lose 8%.
Nobody's talking about Shy. You're like, the only person talking about the CTF. I'm talking about Bill.
Yeah,
you would not have lost money in Bill.
No, I get that. I see that.
You obviously don't, because you keep talking about other ones. I'm talking about that one.
Yeah, but
you're always long. And then you're not just long. And this is something I learned from Chris Kane, actually. Shout out Chris Kane. A good one is, it's hard to pick which one's the best one. So you pick the best two.
We're talking specifically about bond funds?
Yes. Treasuries only.
You could also.
And then I've talked to Mike Hurley about this, and he does the same thing, but he adds junk onto the list.
What does Bill pay?
Whatever bills are paying. What do you mean? What does Bill pay? What are bills paying?
Right now, what is the yield on this fund?
I don't know, 5%, something like that. Look it up.
5.3, whatever. Yeah, 5.2.
Yeah, that sounds right.
Okay.
Yeah.
Now
5.22. There you go. Yeah. Are you not entertained? No, I know, but
no, not really. Because why not just put your money in like a high interest yield account?
That's not what this strategy is designed to do.
No,
the strategy is designed.
Why would I buy Bill when I can get like 5% on cash at a lot of places? You get a Fidelity.
Strazza, you do whatever it is that makes you happy.
No, it's a question. Is that not a good question? That's what people are going to wonder.
Fine, but these are two different strategies, you see. A long-only bond strategy, it does not factor that other stuff in. It's only treasuries. And then you're just changing the duration. Which part, like...
Yeah.
Now, Mike Hurley does the same thing, but he adds other bond funds in there. But he agrees that if I have a lot of other equity exposure, high yields, like an extension of that equity exposure, so you take that out of the equation. Listen, there's no right or wrong way to do this, but I really like this sleeve for a portfolio. I really, really do. And we're not doing it. And that's a bummer. And that's shame on us.
Yeah, I don't know how many people are interested.
I don't give a shit who's interested. I'm interested. I'm the only person that matters.
So I'll keep you guys updated on how long I can stomach holding these things in my account and not using that cash elsewhere. So we'll see. Play by ear.
Well, we all have different objectives, and that's okay, right? Strazza doesn't have 3 kids.
Buying bonds. Buying bonds anyway.
Yeah, no, I like it. I like it. I love how we just had, this is a great conversation, by the way, so I'm glad that we had it.
JC,
Spencer, what's going on out there? What do we need to know?
JC, what are your thoughts on Peloton?
I was wondering if you were going to bring this up this morning.
My thoughts are on Peloton are I love that they took a bicycle that doesn't go anywhere and they put an iPad on it and charged the fortune. And they took that SaaS model. Brilliant. Listen,
you're right.
The thing is that humans are dumb, right? Humans are dumb. So if you know that, there's an advantage to knowing that humans are dumb. And Peloton is one of those. But I guess they didn't take advantage of all of the cash and everything. Are they getting bought out? What's going on? Did Apple finally buy them? What's going on?
No. They had earnings this morning, and objectively they were good. So Don't be hating.
Are
This
they
morning.
good, or are they just not as bad as everybody thought?
No, objectively, they were going in the right direction where you want to go. You want to increase profitability and lower your losses and all that good stuff, and they did that. So,
Are they turning the factories back on yet?
they're cutting costs.
I remember press release from last year. They're like, we're not going to build these things anymore. The market was already flooded. The secondary market for Pelotons was flooded.
Can we bring in Kenny? I know we got Callie Cox coming in. Callie Cox now working for Ritholtz Wealth Management. Big news. Big news.
I would love to, but sadly, no Kenny today. Kenny is under the weather.
Oh, that's a bummer.
Yeah.
Speaking of weather, it has been.
Oh my God! Can we talk about that for a second? It's been amazing.
For me, I agree with Spencer. My wife has been complaining about it the whole time. She says it's too cold. I love it.
It was like 55 degrees yesterday morning. It's amazing.
I'm with you, bro. I'm totally with you. I got two things for you. I am one to just observe what's happening here on Twitter. Is the Democratic National Convention over, or is it still going?
It's been on for like 3 days. It feels like. I don't know if it ever ends.
I don't like watch these things of any party, by the way. But it's been going on for a while. It looks. I like the.
I watched a bit.
Lil Jon. The Lil Jon part was good. I like that.
Okay.
Did you see Lil Jon?
No.
He was like, "Oh, what? Kamala, what? Okay." I mean, it was fantastic. It was great. And then there was another one. And then what's her face from The Office? The Indian girl from The Office, the funny one.
I forget her name, but I know who you're talking about.
Yeah, she's great. And she was like, I guess she's from Massachusetts. She's like, everyone's all hating on Massachusetts. Go Sox. Go Tatum.
That's
it
awesome.
was great. It was like, like I don't think she watches sports. That was my impression. I don't know, but she's funny. She's funny. Can we throw up the chart? Throw up slide 1.
Yeah. So
this has been a massive.
We had some movement here based on the convention.
Huge movement in the poly market. You're not seeing it in the predicted. The poly market is the so this is really cool because this is the first time that you've got first US election where the betting markets are on the blockchain, right? Which is, if you're like if you like learning about the old block and chain and you read all the books like I do, this is cool, right? This is really cool. Yeah, I guess ever since she started talking, she's just been collapsing, right? So I think the original strategy of just not taking any interviews and not saying anything was working great.
Wait, this is just showing the last week. Is that what this is?
It's basically the last week. Went from like 54 to 46. So it's just collapsing.
Do we know like how predictive these are?
Yeah, of course.
We do.
Yeah, we have the history. Yeah, they're spot on. These are markets. These are public markets. So it's not like. It's not like somebody's opinion or formula. Like this is real dollars. Like you ever hear the saying, "Put your money where your mouth is."
We talk about this poly market thing quite often, and I've never seen it before. So
because this is the first cycle where you got poly market. There were other ones before. This goes back to like the 2008 elections. Like this has been around for a while. Different iterations of this sort of thing, but this is the best one so far that's on chain. Also the best UI from all of them, right?
I have a couple things on this. So 53-46 in favor of Trump on the poly market. Predicted, like you mentioned, still in favor of Kamala, 53-49. So that spread did, narrow a little bit.
Not like this.
Hold on. I have a theory here. This is not anything that happened or came out of the DNC. This is that lunatic dropping out of the race and endorsing Trump. So he's going to get those independent voters now. I think that's the movement that we got over the last day or two.
You think?
Wait.
Kennedy?
Yeah, the guy Kennedy. Did
I miss that happened?
Hasn't happened yet, but I don't think so. I think it was just communism.
They've been talking about it happening for 2 days now, though, on trading desks. I keep seeing.
Oh, I didn't know. Sorry.
Going by. So I think that's what this little movement is. This has really just happened over the past 2-3 days.
Nah, that's not a bad theory.
Right?
Like
okay.
Controlling prices at grocery stores and
not a bad theory.
Oh,
you don't think it's any of that stuff?
Oh, that's nonsense. Throw up my regional banks chart real quick first, because this is real. I think this group, at least, and there will be others,
You think Kennedy's a lunatic? I agree with the chat. I don't think he's a lunatic.
Where is your region?
He's a
Oh,
lunatic?
this one? Okay.
Yeah, I think he's probably crazy. So
All right.
this is an election trade, period. Like this group is not a group that I really want to own under one president, and it is a group that I want to own a ton under another president. I don't know if there's another group of stocks outside of regional banks where that's more true, right? And you see it, this relationship has been so strong. So if you're in these stocks, if you're trading these stocks, it's important to be aware of this dynamic. I think the election is really, really important for mostly the small banks, but the big banks too.
So what if they bring in Gensler? Could you imagine? You got like theoretically a president who doesn't understand economics 101, and then Gensler anti-crypto. Like, could you think of anything worse for the cryptocurrency markets?
Who's going to bring in Gensler?
Harris.
No, everybody.
It's all rumors, man. It's all rumors.
That's crazy. That's
I know. That's crazy talk. I got one more. I got one more funny one from the Twitter. Slide 2 there, Spencer. So this is good.
Isn't this more of a recess item? No.
Yeah, I couldn't help myself. It's too good. So this is what happens when you take a kid from Connecticut, right? Because he's from Connecticut. No, he's from Denver. He went to Yale, right? So you take a white kid from Colorado, and you put him in Miami for a couple of years. This is what happens.
I don't like him, and he looks homeless.
Dude, he's the man.
All right.
Here's the quote. Mike McDaniel. Hold on, let's read it. This is funny. Mike McDaniel looks like he hit Miami exactly one time for spring break, and his whole life changed.
Yeah, it does.
All right.
Come on. That's so good. It's so good.
Why do people hate Gensler?
Can we like talk markets for once?
Yeah, can we bring in Callie? We're waiting for Callie.
She's here.
Oh, bring her in. Let's go.
Oh boy.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Callie.
Hey, what's up? It's good to be back.
Good to have you. We can tell the whole world now, right? We can tell the whole world.
We can. I'm chief market strategist at Ritholtz, and I'm back on Stock Market TV. Whoa.
Fantastic. Those are some of my best friends in the entire world. Love them. I am now a client of yours, you see. So you have to do what I say. That's how this works now.
Yeah, well, thanks for your support, and I'm excited to, be even more nerdy with you.
Oh, I love it. I love it. Listen, I had a front row seat when these guys started the firm back in 2013. I was actually working on the same floor, and I knew what's going on. And they split one day to start their firm. And they're trying to get to 100 million, because if you start with 100 million, you get to do all the filings like across the board instead of like state by state. So I remember like those conversations. 100 million. It's a rounding error now. 5 billion for Ritholtz Wealth Management. Very nice, Callie. Very nice. It was all because of you, right?
I mean, clearly. No. Our advisors are superheroes. Josh, Jay, Mike, and Chris have built a hell of a firm. I feel so honored to be on the rocket ship.
No shout out for Barry.
There's a reason why they're growing.
No shout out. Barry doesn't get a shout out.
Barry, of course. I'm so sorry, Barry. Barry's name is on the firm. No, but those 5 have built an incredible firm. It's one of the fastest growing RIAs in the nation right now. And there's a reason why we're innovative. We care about our clients. We talk about markets and how they really work. And, that's why Ritholtz is the rocket ship it is.
I love it. I love every second of it. How often are you in New York now?
I'm in New York like once every month or two. Yeah, I come up every once in a while.
It's so easy for you.
I know. I'm in Charlotte for people who don't know. So it's just it's a plane ride up. Easy.
Hour and a half, maybe.
In every season, but hurricane season. Yeah, hour and a half.
Nice. Well, so let's talk about markets. All right. So now what is your official role? And then how has that changed from your prior role?
Well, not a lot and a good bit. And what I mean by that is if you're a client of Ritholtz, you have access to my stuff now. We're building a top of the line research product that clients can access, that you can get through your advisors. But I'm still talking about markets anywhere and everywhere. I get to continue doing media, which is one of the most exciting parts of my job. I get to nerd out over markets for a living. I swear I have the best job in the world, JC. So it's pretty close to what I did at eToro, a little more of a focus on long-term investing, which was always my sweet spot to begin with. But I'm still watching markets like everybody else. So I'm right here digesting the same things you are.
I love it. So with all this digesting that you're doing, like what is happening? I mean, I see this New York Stock Exchange Composite hitting new all-time highs, equally weighted S&P, new all-time highs, Dow, new all-time highs, seeing the new highs list expanding, not deteriorating. The new lows list is non-existent. I don't know, not seeing a lot of evidence of a bear market. Looks like things are good. How long can this last?
Well, we're seeing the same thing. Breadth is expanding, not just in the market, but in earnings, in profit expectations and actual profit growth as well. And that's a really encouraging sign because JC, as you know, like the story of this bull market has been a few stocks leading everybody higher across the board. And that's just not the case anymore. We think that's a rate story. We think, if the economy stays solid and if the Fed indeed cuts rates like everybody's now expecting in September, and the Fed is able to save the economy, then we have another chance at a bull market that's a little less sleepy. And we still believe in that. I'm at the point with economic data, especially after the jobless claims number this morning, where you have to see a breakdown in the job market to think that we're in trouble, and we're just not seeing it yet. So, that's really what I'm watching: job market data and the breadth of the gains and the support we're getting across the market.
Let's stick with that theme because this isn't something that I'm super familiar with. I know you definitely are, much more so. The stock market is a discounting mechanism, right? It's pricing in, the future and things like, jobs and stuff like that is relatively lagging. They're always getting adjusted and things like that. But I think it's, I think you're spot on that it's hard to have a slowing economy if everybody's employed and things like that. So how do you think about it from like a timing standpoint? Like by the time unemployment starts blowing out, is it too late? Is it more coincident? Is there some sort of leading indication somewhere in there? How do you think about that?
Well, that's the biggest question right now. So, initial jobless claims or first time claims for unemployment benefits are typically the leading indicator you watch. And we just got a release at 8:30 a.m. Eastern showing that initial jobless claims as a percent of the workforce, because, of course, our job market of the 2020s doesn't look like the job market of the 1970s. Claims as a percent of the workforce are still quite low. But it's tough, right? Because right now we are seeing the unemployment rate rise. I think for mostly good reasons, but the tricky part is that good unemployment or people entering the labor force and looking for jobs can turn into bad unemployment quickly. So to answer your question, JC, we're seeing a lot of mixed signals from the job market right now. I would put more weight in claims than anything else. And for the most part, I mean, we're seeing good but quirky data that's throwing people for a loop.
Can you school me on the jolts? Like, isn't it like, at one point there was like 2 jobs for every person looking for a job, something like that, right? How close for a dumb technician? How close am I?
You're pretty darn close. And
All
I'll be
right.
honest, Jolts outside of nerdy economist corners weren't really a mainstream report until this cycle when Jay Powell started mentioning it. And to his credit, I think it is a much more important indicator this time around than
Can
it
you
was for
explain what it
past
is
cycles.
exactly?
Oh, of course. Okay, so if we back up for a second,
I know I
Jolts.
sound like I know what it is, but I just like saying fancy words.
So Jolts is the job openings and labor turnover survey. It's a lagging report. You get it pretty late after the month has ended, but it shows you how many job openings are in the market. I believe it breaks it down by industry, and it shows us some other interesting indicators like the quit rate, why people are leaving their jobs. It shows the vacancy rate. What percentage of total jobs are open. Excuse me. It gives you a little more color than the average jobs report shows you. And I think it's really interesting right now as we kind of recalibrate from a job market that really shifted in the employee's favor. The quit rate, around 2021, 2022 actually spiked, showing that, people had the upper hand and, leaving their jobs and demanding more pay, which sounds like a great environment. It is a great environment, but that was one of the main catalysts sparking inflation. So of course, we all love a good pay raise, but at the same time, if prices are rising quicker than our pay, then we're all in trouble. That's not an economic dynamic that you want. So the Fed's job has been to get inflation under control without breaking the job market. So far, they're doing it. The JOLT survey has showed us that it's kind of coming back in line with what we saw in 2019.
And then unemployment being too low. In other words, there are too many people having jobs is inflationary. Like that's actually not a great thing that too many people are employed. Like you need some unemployment for a healthy economy, right? Like I guess people don't think of it that way. They're like, oh, everybody's got a job. It's so great. It's like, no, that's communism. That doesn't work. We need people actually fighting to try, right? There's kind of like a balance there, right?
Well, here's how I think about it. Wages account for about 85% of business costs on average. So if you're going to have inflation, you're probably going to see some imbalance when it comes to wage growth. And that goes back to we all love a pay raise, but we don't like it when prices are growing faster than our paychecks. That's not a healthy dynamic in the economy. So typically when the job market is really, really tight, like you said, JC, unemployment very low, then yeah, it feels like things are going great, but the economy and economic growth can run out of hand. And the Fed's job is to get that back in balance. And so far, they've been doing it.
You know, when I look at the stock market, I think about the stock market from a global perspective, right? I try not to consider myself an American. I try to think like an earthling, right? Like this is a global stock market. And you know, I kind of got that, you know, probably about 15 years ago. And I've really always approached it that way. And so, you know, and I know, I mean, you worked for a foreign company for quite some time, right? So I imagine like, you think about that too. So now here you are at Ritholtz Wealth Management. We're looking at like Jolt's numbers and, you know, employment and U.S. inflation and the Powell and this and that. But how do you think about what's happening in the rest of the world?
Well, first of all, hello, fellow Earthling. I love that you said Earthling. I feel like I should do this or something. Yeah, well, look, we're all international investors. 40% of the S&P 500 S&P 500's revenue comes from international markets. So you're a global investor, you're an Earthling, whether you realize it or not. And you're right, eToro is a global company. It's much bigger in Europe than it is in the US. But
Israeli? eToro's Israeli?
They're based in Tel Aviv. But even at Ritholtz, I mean, we of course focus on international markets, and we actually think there's a lot of value there. And speaking of value, international markets are not as tied up in tech as the US is. So if you think about an environment where tech is selling off, where investors are rebalancing their portfolios, international markets could have a chance to catch up here.
You know, when you go back and you look at every bull market ever, technology is an outperformer in almost every single one of those, right? Then when you look at these international markets, very few of them, to your point, have that technology exposure. The United Kingdom has 0% technology. Peru has 0% technology. Like these are just other economies based on other things. Like it's hard to find, you know, a situation like the United States, maybe like Taiwan or something like that, you know, Israel a little bit, you know, where there's much more technology exposure. So if this is a bull market, and we know that technology is usually an outperformer in bull markets, then like what's the justification to look outside of the United States? And I don't have the right answer. I'm looking for help in how we should think about this.
Yeah, it's a good question. And I'll just remind you that tech has looked different in every single cycle. I mean, the tech that we're thinking about right now, we're thinking about, but I say we, I mean the world and their daily routines is using, you know, an iPhone, that's Apple. They're using social media, that's Meta. They're, you know, thinking a lot about AI, that's NVIDIA. But tech in this cycle doesn't look like the tech we saw in the 2010s bull market. That was social media, that was the cloud, that was services. And rewind even further. I mean, it doesn't look like, I mean, easy statement. It doesn't look like the tech of, you know, the tech bubble days. So I say all this to say that tech looks different.
Or RCA in the 1950s.
Or RCA in the 1950s, or tractors back in the 17th and 18th centuries.
And railroads. And yeah.
Right. So tech looks different, growth looks different in every single cycle. And we actually may be at a point where the biggest tech stocks look a lot more like these big defensive conglomerates than anything, which puts them in an interesting situation right now, because if growth picks back up and rates come down, we could see some money rotate out of tech. So if you're a tech investor, remember that tech isn't limited to the Mag 7, right? You know, innovation is happening everywhere. In fact, we're seeing a lot of innovation right now in manufacturing of all sectors. So when you think about tech, just remember that the definition is a lot looser than most lead it on to be.
You know, we've had a pretty strong negative correlation between the United States dollar and equities, and the correlations between the dollar and rates have been pretty tight. So in theory, falling dollar, falling rates, good for stocks. at what point is it, wow, this collapse in rates and this collapse in the dollar? What does the bond market know that we don't? Like, at what point is it no longer a tailwind for equities? Falling dollar, falling rates.
I think you have to look back to the job market. And I say that because I think that's the biggest question that people are struggling with right now, JC. Rates are falling, and right now it looks like lower rates are a good thing. It looks like a recalibration. Lower rates lead to lower mortgage rates and lower auto rates. And those two sectors have basically been frozen out of the economy. So lower rates
What
can
does
be
that mean? Those two sectors frozen out of the economy.
Sorry, what'd you ask?
What does that mean? Those two sectors have been frozen out of the economy.
Well, when the Fed hiked rates from 0 to 5%, yes, we've seen auto sales keep up, but we've seen housing activity basically go dormant over the past 2.5 years. And it makes a lot of sense. Like, who's buying a house out there at a 7.5% mortgage rate? Not many people. And if they are, their hands are being forced a little bit. So we've seen supply come down in the housing market. We've seen demand come down in the housing market. But as long-term market rates come down, we could see mortgage rates come down and more both buyers and sellers come back into the markets. But I say this because nobody knows where that switch flips, JC. It's hard to say, 5% mortgage rates are good, but if we get down to 3 or 4%, then we should be worried about the economy, which is why I focus on the job market data. Consumer spending is 70% of the economy. If you have a strong economy or a solid economy, you have a good foundation for markets ahead.
No, it's a great point. What is the best for us, for us who are interested in leading indicators and like forward-looking discounting mechanisms, which many of us around here are, of all of the jobless claims and jobs data and all these reports that are coming, I feel like every day there's another report. Which is the one that we should be focused on as the best leading indicator? Like, or maybe not the best leading indicator, the least lagging indicator. How's that?
Well, like I said, I like initial jobless claims. They have a strong historical record of predicting trouble in the job market. Continuing claims, of course, a little less leading, but also important to watch. I'm trying to find more data on small businesses at the moment. There's a huge gap between small companies and larger companies in the stock market. And I have to imagine that's bleeding over into the job market as well. And the dynamics are a little bit different, but I'd love to understand, what components of the job market are doing better than others. If we see that breakdown happening in smaller businesses, especially smaller private businesses, then I would be a little more worried.
We always talk about how, technology, kills certain jobs, but creates new ones, right? There's just new ones that are just, necessary because of the new technology. So I'm really, really interested to see what some of these new jobs are. I mean, we're seeing it already. But on the housing front, home builders keep making new highs. Home builders look great. Like, I understand, I keep being told like all this stuff, all these, there's real estate and, it's a problem, everything like that. I see REITs making new 52-week highs every day. Home builders pushing up against new highs. I keep being told this real estate is going to bring down the entire economy and everything's about to collapse and the house of cards and the Ponzi-nomics and the whole thing. And I see REITs making new 52-week highs, home builders making new all-time highs. Like, where's the disconnect?
Well, you said it yourself. The stock market is a discounting machine. They're looking ahead. And a lot of data we've seen is either coincident or lagging. I think it's a lower rate story, JC. Home builders have been the center of a lot of narratives in this economy right now. If you backed up or rewinded 6 months or so ago, the talk was, people can't find existing homes being sold on the market. So they're looking to build their own homes. And of course, we're lacking in supply. So there's a little bit of a push there, politically and also demographically. But I think the recent outperformance in REITs and home builders really is a lower rate story. And it's part of the reason why breadth has been so strong.
My understanding is that we are in a consumer-based economy, the United States, right? Is that right? Do I have that right?
Oh, Americans know how to spend money better than anybody else in the world. I think you have that right.
And it's like a 70% of GDP. I mean, I'm getting out of my lane here, so cut me off. But is that what the story is?
No, you're exactly right. Consumer spending has consistently been around 70% of GDP for years.
Look how I knew that. Are you impressed?
Yeah, I am impressed. That's a great stat.
Not bad. Now, with that being said, I see things like Ferrari making new all-time highs. And it's like, well, JC, that's the rich getting rich. It's not a sign of the economy. All right. The way I see it, the rich people are the ones that create jobs, that are the entrepreneurs, but okay, fine. Rich getting richer, maybe that doesn't count. Then I look at Walmart. Are those only rich people going to Walmart? Is it only the rich folks that are the rich getting richer going to Walmart? Because I see Walmart making new all-time highs. I see Costco making new all-time highs. I don't know. How do you think about the consumer, home builders making new all-time highs? How bad could things be? So how do you think about that?
Well, I'll start with this since we're talking about portfolios and investing on this show. Really, what matters from a bird's eye view is the totality of the American economy. That being said, I totally believe that different consumers are having different experiences right now. And I think that's a problem because it can eventually bleed into that total bird's eye view that we're watching. Talking about job market data again, you just see one number that's representative of the entire economy. And you can see that breakdown when you look company by company, but for your whole portfolio, you need to look at the totality of the economy. We are seeing, these gaps between consumer health when it comes to lower income, middle income, higher income households. I mean, LVMH has been one of the best performing European stocks for a while. There's a reason for that. And I think where the trouble really arises is A, if you're super concentrated in consumer stocks, if you're looking at different retailers, and then B, if that weakness or if that inequality across income groups spreads to the broader market. But you're right. I mean, Walmart is seeing strength here. Maybe consumers are trading down a little bit there, but Walmart's seeing strength. Target is seeing strength. Costco is trading near record highs. It's got to make you think a little bit. And from job market data, it doesn't look like the consumer is breaking down as much as everybody thinks.
Callie, you think that Walmart and Costco should be consumer staples? Don't you think they should be discretionary?
That is a really tough question. And my analyst answer is, I'm not totally sure. I feel like that's a question for S&P. I'd have to think about that one. When you think about consumer staples, you think about toothpaste, you think about toilet paper, you think about those boring items that you take for granted in your life. And you know what? Walmart and Target sell those.
They sell a lot of other things too, though.
They do. So it's a good question.
What don't they sell is really the question.
What don't they sell? I
Right?
mean, here's my question. Should
Ferraris,
Amazon be
for
a consumer staple?
That's true.
Think about it.
What about this middle class that I keep being told is disappearing? And that we need to bring back the middle class. As an ignorant line go up guy, is that true? Like, is the middle class disappearing? Do we need to bring it back? Like, what's going on there?
Well, first of all, I want to give a shout out to Stock Market Mike in the comments because he said it's like the economy is a barbell, and that's a really good description of what we're seeing. There is inequality across income classes, and it's an issue. If you haven't been invested,
more than history or consistent with historical norms.
It's hard to say, but I'll throw some data at you. Wages did not keep up with, definitely did not keep up with the stock market, didn't keep up with inflation in the 2010s. And that's a problem if you're a worker who depends on their income to, make a living, which is a lot of us. It really points to the importance of being invested, JC, which is why I do what I do. But also, you have to understand that there have been some imbalances in the economy that have squeezed consumers more than businesses. So yeah, it seems like a problem, especially with housing so expensive right now. But I also think it's hard to compare to historical norms.
What is the middle class? Like, how do you even define that?
It's a good question. Beyond me, that's a question for an economist.
Yeah, I mean, it's hard to, it's hard to put a finger on it. What about, now you're working at Ritholtz Wealth Management, financial advisors, so a great conversation often revolves around risk. And you often hear, the stock market is too risky, and these valuations make things too risky, and the risk and the risk and the risk. What about the risk of not being invested enough, right? You alluded to that before and the importance of being invested, but like, why do you think that part of the risk equation is rarely discussed? Like, what is the opportunity cost? What is the risk of not owning these stocks, right? Like, how do you think about that? what kind of things do you tell clients that? Do you need to tell clients that?
Well, first of all, yes, that's a discussion we have with clients regularly, and it is a risk, JC, even though it doesn't feel like a risk. When we think about risk, we think about the stock market crashing. We don't think about market prices doing well and us missing that and having to buy in higher. Our viewers might be thinking about that because y'all are the smart ones, right? You're watching you're watching this episode and you're taking an active approach to your investing. But we're not. I'll put it this way. Clients have come from different experiences. Risk looks different for everybody. And missing out on markets is a huge risk to consider, especially if you're sitting or overweight in cash right now. So that's a big discussion that we're having, JC, especially given that things feel a little uncomfortable at the moment, but market fundamentals still look really good. And rates are coming down. So cash is looking less and less attractive by the day.
What is it that's making you uncomfortable or making people uncomfortable, you think?
Well, I mean, obviously the economy is making people uncomfortable. We saw a growth scare earlier this month where job market data made people feel like, unemployment was breaking down, and that's the tell usually right before recessions. So I can understand why you're uncomfortable in this environment. There's a lot of change going on, but looking from a technical perspective, I mean, I know you guys are technicians, so you probably see a different story. I mean, I see expanding breadth. I see rates coming down. I still see a Fed that can pull off a soft landing. So I'm less uncomfortable, but I understand and I empathize for those who feel like the path is a little shakier.
Do you?
Of course I do. Yeah, I do. There's a lot of fear in this market, and it's hard to digest some of these headlines, especially when you're just getting pounded with information.
I guess I take the other side. I'm in the camp that, the best time to kick someone is when they're down, right? You always hear that, like, right? So like, I think that the amount of cash that's on the sidelines, you think about how quickly the volatility index spikes on next to nothing. You had the largest mean reversion in bullish newsletter writers since 1987. The fastest, quickest mean reversion. Like, I think people are scared. And I think that is bullish for equities. Like, I would take that as a good thing. Like, as an investor, as someone who's buying stocks, like, it's less about being empathetic and more about celebrating the fact that there are, so many, scared, wimpy participants, I guess. I don't really have a better way to put it, but like, I like celebrating the fear, right? You see what I'm saying? Like, it's more like fuel to the fire. Like, once everybody's complacent and once everybody can't think of any risks, that's the problem, right?
I agree with you. From an investing perspective, fear is one of the best dynamics you can ask for, because if you're bracing for the punch before it hits, it's going to hurt a lot less than you think. And this was an important dynamic to talk about in the latest sell-off too. I mean, fear, if you look at the AAII survey, bears surged at the fastest pace since 2022, the week that the yen carry trade imploded. I looked at that, and from a sentiment perspective, I was like, well, there we go. We're already expecting the worst case scenario. It only gets better from here. And, an 8-day streak in the S&P 500 later, here we are. So sentiment is important to watch, even though, when the yen carry trade imploded, I had more friends than, since the meme stock days texting me, asking me what was happening. So that's where the empathy comes from.
I didn't get any text messages from, civilians, not one.
Well, JC, how many friends do you have? I'm just kidding. I'm kidding.
It seems like too many sometimes, but
I need to talk to your therapist about. I'm just kidding.
No, but I remember 2017, I'm getting text messages about which crypto I should buy. Not if I should invest in crypto, but specifically which ones. Like, when China was bottoming earlier this year, my father was texting me on a Sunday night asking me about the Chinese stock market. My father has never texted me about any stock market, yet alone a Chinese one. I didn't know my father knew that China had a stock market. Right. The Chinese stock market, as it turns out, had bottomed the Friday prior to that Sunday evening text. So I get them from civilians. They come. I didn't get one. I didn't get anything a couple of weeks ago. Zilch, which I thought was a little surprising. They need more pain maybe before the text messages come.
Maybe. And look, like we're all dealing with different people, right? But it's a good sentiment indicator. I thought it was really surprising that I got so many questions about it, and I love it. People are becoming more informed. They're asking about
I'm gonna start calling you. Be like, you getting text messages from civilians, Callie? You know?
Yeah, well, you're a client, so you can.
Oh shit, that's right. I get access. Fantastic. Spencer's a big fan of yours, and I always like this. I always tend to steal all the questions when we have good guests around here. But Spencer, is there anything you'd like to add to this conversation?
Honestly, not really. I would just kind of pop it in just to pop in. But since I have the floor, Callie, what I always love to ask anybody that works in wealth management is the same question, which is like, what are your clients asking you about right now, right?
Well, so the biggest question we're getting these days is about politics. You know, what happens after the election? Should I care? What should I do for my portfolio right now as we edge closer to that? And look, that's an investing conversation and it's a personal finance conversation as well. We all know the TCJA, is parts of it are set to expire at the end of 2025. So we're being extremely proactive there, talking to clients about that, because there are a lot of individual as well as corporate parts of that plan that you have to consider when it comes to all aspects of financial planning. So getting a lot of questions about politics, getting a lot of
Callie,
questions.
On that front, are people asking you or asking the firm in general because they legitimately want to do something about it or not, or they just want talking points at the country club?
No, of course they're asking because think about it. Our clients have multiple generations to care for. They have businesses. There's a reason why they're wealth management clients. They have estates that they have to think about. So yeah, they're asking on behalf of their own money. And in fact, I think this is an angle that people should talk about more. It's not just, will the election make the stock market go up and down? Yeah. It's what will the election do for my wallet and my
so it's a tax question, really. What it is?
I would say it's broader than that, but
okay.
Yeah.
That makes sense. But it's not a markets question to be like that. That's the key takeaway, right? It's not
I think it's both. I think it's both. And the reason why I say that, Spencer, is because tax is actually a really good example. The corporate tax rate matters for American companies. I mean, I think that's the basic statement you can make here. And right now, when cost cutting is the focus in earnings season, the tax burden burden of companies could make people especially jittery. But on the individual and estate side, of course, you have to think about tax strategy. We have a whole tax team at Ritholtz that focuses on that. And then there are estates as well. There's future planning. There's business planning. There are a lot of different aspects of your financial plan that you have to consider.
Callie, you going to Huntington Beach?
I am, and I'll be talking about cash at 5%. I'll be moderating a panel on that. So come check it out.
I'll see you at the bar afterwards, I'm pretty sure.
I don't JC, you're not coming? You're going to come see my panel? What the heck?
I will be. I don't know about that 5% cash conversation that you're going to be moderating, but
you were talking about this. Wait. An hour ago, we were just talking about this.
No, I know. I'm just kidding. Just goofing. Just goofing.
Call him out, Spencer.
Yeah. No, of course I'll be there. Are you kidding me? I'll be front row heckling you.
Yeah.
Great.
Yeah.
Bring it on.
For sure. I'm looking forward to that. I can't wait. It's going to be a lot of fun.
Yeah, me too.
So, ladies and gentlemen, those of you who don't know what we're talking about, Future Proof is a great festival. It's less of a conference and more of a festival. It's more of a celebration right on the beach, right in Orange County. Oh, far enough away from LA that you don't have to go there. Right next to Laguna Beach, right on the water. Great crew coming in from all over the country. Always a lot of fun. We were with Method Man and Redman last year. This year's Third Eye Blind. I don't know whose decision that was. We were moving in the right direction there. I don't know what happened there. I'm gonna have to call the higher ups, Callie, see what happened there.
Wait, is it a problem to say that I'm really excited for Third Eye Blind?
I'm kind of excited too. I was more excited for Method Man and Redman. I'm not gonna lie. But yeah,
I'm with you. I'm with you, Callie. Don't talk shit about the 3EB on my show. What are you crazy?
Method Man and Redman last year. You understand?
Whatever.
Third Eye Blind.
No more hip hop shows at Future Proof.
Snoop next year. I hear in the Miami they're going to get Khaled. I think they're getting Khaled for the Miami conference in March. By the way,
you have to get Pitbull in Miami. When in Miami, listen to Pitbull. But
yeah, you got to get Pitbull.
I think it's too expensive. I think Pitbull's got to be up there, bro.
Okay, I don't know.
Yeah, he's Mr. Worldwide. Remember?
Yeah, right. Listen, Callie Cox is the chief market strategist at Ritholtz Wealth Management. The links to her Twitter and to her blog, Optimistic Callie, are both in the description of this video on YouTube. You should check them both out. If you don't follow her, you should. Me too.
Congratulations, Callie. We're all happy for you. We're all thrilled to hear the news.
Thanks, guys.
congrats.
It's I'm so excited to be back in it, and I hope we can talk soon.
Love
All
it.
right. Thanks, Callie.
Thanks.
When she told me she was going to work, it hadn't been announced yet. And I was on the phone with her. She told me, she's going to work with these guys. Like, really? So that was awesome. That was great news. Obviously, I love those guys, as you guys know. So having her on the team is always a good thing. Dude, Method Man. I just want to say something about Method Man and Redman. Method Man has got his shit together. Like, it's not about like drinking 40s and smoking woolies. Like, it's not about that. Like, he's all business. I was actually very, very impressed with one Method Man. Redman's got some loose screws. Redman, he was just going on and on about the new marijuana political party, and he's going on and on and on. And it's like the marijuana political party. I think a few too many woolies for Redman, but Method Man, he's got his shit together.
Method Man diversifies his bonds.
Method Man is jacked, by the way. Method Man is jacked. Yeah,
Bonds.
true.
All right.
Yeah, he's pretty jacked. Yeah, it's true.
Let's talk about some of the movers today.
Yeah, please.
Real fast. I had snuck in a couple of railroad charts only because I thought this is interesting. I don't actually think they're moving that much this morning. They were like both last I checked, but both CP and CNI, right? Is the other one? Yeah, they're in the red a little bit, but we have ourselves a good old fashioned lockout. The two largest Canadian railways, both locked out at the moment. So, obviously, it's not a big deal if it lasts for like a couple of days, but if this lasts for a couple of weeks or longer, this could be a big deal. So, we have the charts here somewhere. Let's get them up on the screen. Here's the CP, and
you know, some of these companies, and there's just too many humans in some businesses. You know, when JC jokes on me because I say, oh, software stocks, just the most amazing businesses in the world. Think of something like Kansas Pacific or Canadian Pacific as the opposite of software. It's just even the manufacturing heavy stuff, right? We're always talking about the strikes at the car makers and stuff like that. Bad business risks.
yeah.
I stayed when I was in Toronto. I stayed across the street from Canadian Pacific. I was very excited. I love seeing ADRs in the wild. Beautiful building, I must say.
Spencer, do you own any railroad stocks?
I don't think so. I guess it's possible that it's because I don't own any super broad industrial things. So no, I do not.
Now, is that like a bias, or is that just done intentionally? You're just not.
No, I mean, I don't know. Are these in the S&P? They're not, right? So
Yes, they are.
no, then I don't own them.
ESX, Norfolk Southern, UMP.
Some are. Some rails are.
Okay, well then I own a little bit, but
I think like millennials just don't want to own railroads.
But are they wrong to think that way? I think
it's recency bias. Like if it's not a tech stock, they're not interested.
But is that recency bias, or is that, or is it understanding financial statements and business?
It's definitely not that one.
You don't think so?
No.
Do you think some people, like there's some really smart fundamental folks that we know out here on the internet, they're only doing work on growth stocks, tech stocks, right? Modern.
You don't think that there's some recency bias in there too? I'm a growth investor. Why? Because growth's been outperforming for a decade.
Well, stop.
I only invest in America. Why? Because America's been outperforming for a decade.
I think some people, maybe they got to that answer in the wrong way. You're right. But others, like your good pal Joe Fahmy, he doesn't want to talk to you about railroad stocks.
He's always been a growth guy. You're right. It's
but
true.
Is he wrong? Like there are some really, really intelligent people who we respect a lot they just want the growth. Bill O'Neill.
It's not about being right or wrong. At the end of the day, you can do whatever you want, right? So I don't think there's anything wrong with only being growth stocks, but like there's other stocks that are doing great. And look at all these industrial stocks that have been doing great for a long time. And then some would argue that those are technology that's boosting that, right? I think you're one of those people.
Yeah, I think some people will tell you they want growth or tech stocks because it's higher beta. That's not always true. You get into some of these commodity stocks at the right time during a bull cycle, there's going to be more beta there than software. So I think there's a lot of different reasons that people use to get to that answer, but there are a lot of people who they want growth stocks. They're not interested in the value stuff, and I think that's all right. Can we go from one Canadian stock to another? So
Yeah,
TD
TD.
Bank, yeah. Talk about the TD Bank. Schwab.
Yeah, so another day, another giant, I guess huge block trade. I guess you can call it that. We had the JD Walmart thing. I guess that qualifies as a block trade. Today we have TD Bank trimming their stake in Charles Schwab from 12% to about 10%.
Oh, I thought it went to 0. Oh, okay. So they just
No. It was just a it was what was the share amount? It was
But you're right. This is now back-to-back days where some giant equity investment stakes on the books of public companies. There have been some monster asset sales. We had the JD yesterday, right? And now,
yeah.
It
was a I forget it. The number of shares is not important. All you need to know is that they trimmed their stake from 12% to 10%. Schwab is down. At least it was last I checked. I don't know if it's still. It was down all pre-market. Yeah, it's on the red. 1.5%. TD's down actually 4%. Interesting.
So Snowflake had earnings, missed. Peloton had earnings, already discussed it. I guess it was an objective beat. And then Zoom, also a pretty solid beat. I think they might run this one today. It was up a lot more last night after the report. Yeah, look at that.
Zoom was good, and more importantly, with Peloton and Zoom, it wasn't so much that like their reports were good, but they both like had good things to say about future quarters, right?
Can we talk about this? Because Strazza, we brought this up yesterday, you and me, about what to do after in some of these names. If these things go, I'm going to hold this going into earnings. If it's a 0, it's a 0. But if it's not, it's going to rip. You want to talk about that?
Any of the breakout multiplier clients are familiar with Zoom. We've talked about it a lot, and we paid $1.50, so $150 for a contract, and got into calls, 3-4 weeks ago now. And there were a lot of questions because they weren't working. They had a quick pop, and then they're really just hanging around 50% drawdown. So a lot of questions about, are we going to cut this one? And, we looked out and we said, we have a potential catalyst on the horizon with earnings coming up. We really didn't pay too much for these. You want to cut them at 50%? Fine. But I said, I'm holding mine. I'm just going to hold them because the risk reward equation is still solid. If this company, puts out a great earnings report and rocks higher, those calls are going to pay. And it looks like,
and by great earnings report, it could just be a lot less bad than people expect. Just to be fair.
You know what? You're right. I said that the wrong way. If they beat, and a beat just means the market rewards them for whatever the hell they reported. It doesn't have to beat these street.
What are those calls worth right now?
What's that?
What are the calls worth right now?
I will have to check. But they just moved into the money, so we will be in a profit position for really the first time in a couple of weeks here. I'll tell you what they're worth. But you never know, right? And that's why you play stuff like that through calls. Actually, I had a really interesting conversation with our analyst, Sam, last night. I was talking because the earnings had just hit, and he goes, why did you put that trade on, Strazza? Like, you're a relative strength guy. Don't you think Zoom is a 0? Why are you long?
But because what if it's not a 0? That's why.
I'm like, yeah, I think it's a 0. Totally. But your long calls. Yeah. I'm trying to make money this week, next month. Like, it has nothing to do with the company going to 0.
It can go to 0 after my options expire.
It's also just, I'm going to buy that pattern kind of over and over and over again. That same kind of pattern with a scoop to new lows before it rocketed higher. That's how we got into Coinbase early. We got into Shopify early in 2020.
Apple, Tesla.
Right? Like that little pattern with the shake and go. I'm interested every time. I don't care if I think the stock is a 0. So the Zoom calls right now are trading at, they're like $1.50 yesterday, 220, 221. So,
right. So not quite a double yet, but getting there.
No, we paid $1.50, so we're okay. Yeah, not a double. Yeah. We'll see. You never know. After a nice beat like this, you often get some follow through. So if we get another green candle or two, we'll be selling the double today or tomorrow. I also want to tell a story.
Story time.
Throw up this Wolfspeed chart, Spencer. If you want to read out the headline, they just reported too. And boy, what a beautiful dead cat bounce this one's enjoying here today. We're already out.
Yeah. So the headline on
WOLF, not to be
the headline
confused
is
with WULF.
EPS of an 89-cent loss versus an estimate of an 84-cent loss. So that's a miss. Sales $200 million, which is a miss by $1 million. So I'll call it in line, but it's technically a miss. The guidance was, again, technically misses, but like not by a hair, right? Like basically in line, just slightly below the estimates, right? On the top and the bottom line. So basically, technically, they missed across the board for everything. And where's this chart?
So put up the first one. So I don't usually short stocks, very kind of vocal and open about that. But this one came across my desk in late June. We talked about it on a number of our shows. We talked about it on one of our analyst team meetings too. And ultimately, I got excited when I saw this chart because I said to myself, this is a semiconductor. And this is like the great semiconductor bull market of 2024, right? 2023, 24. I'm like, if you're a semiconductor and your chart looks like this right now, semiconductors were trading at new all-time highs. It was late June at the time this chart was published. I said, I have to be short this thing, right? Because it's the worst ones that if semis came under pressure at the index level, right, and the good ones actually start to sell off like we saw in July, what are the bad ones going to do? They're going to collapse. So shorted Wolf, and this trade paid in a couple weeks' time, down 40%. Throw up the next chart. This is how I have it marked up on my software. This is as bad as it gets. You're a semiconductor wolf. Spencer just told me you're not even making any money these days. It's awful.
That's
so I don't know
true.
if this one's going to zero. What's going on? I no longer have a position, but relative strength is just too good. In this case, it was relative weakness, right? If you go back to the last one, look at the breakdown in the relative trend. Flip it back. Look at the breakdown in the relative trend ahead of the absolute trend. Love to see that. It's some of the best evidence or best data that we have to support our bullish and bearish theses on different assets, right? So Wolf, we said, okay, this one's going to break down. What a laggard and such a good group. If God forbid semis come under pressure, start to give some back, broadly speaking, the bad ones are going to lead to the downside. This chart, the absolute chart in the top pane, is going to break down and start to look a lot more like the relative trend in the lower pane. That's exactly what happened. And that was a great short. So that's my story time.
Is Sean coming?
Yeah, he's coming. Should we bring him on? Bring him in?
Yeah.
Bring him out. Bring him out. All right.
Shawnee baby.
Go Cubs.
Ooh, we will be at the Cubs game 1 month from today, right?
Oh,
1 month from last week.
I just noticed my camera's in reverse. How do I fix that? There we go. Is that better?
There we go.
There we go.
Look at that. Ooh, go Cubs.
You look better. This is your good side.
This is my good side.
This is your good
Boy,
side.
man, I could have really used Steve Strazza's story times when my son was 4 years old and wouldn't go to sleep at night. That was good stuff.
That was good. Great story there, Strazza. Great story. Shawnee baby, how about what do you think about my conversation about the economy with Callie Cox? That was pretty good, I thought.
I mean, I think you were a little out of your depth, but you swam well.
No, I know. We all know that I'm out of my depth. Like we know, like that this is not what I do. But I thought I thought that was pretty good. Spencer, were you impressed? You saw how I threw out that jolt?
I was impressed. I, for one, was impressed.
I mean, look,
bad.
good on us. Good on us for bringing on the smart people who actually know about these things to bring them on and talk about it. And you know, I'm glad to keep it going here. This is the day when you bring on the good-looking guests. So you're welcome. I'm glad you brought me on too to keep that
I was going to
going.
say, are you the exception? Is that what's happening here?
No.
Oh, got it.
Hey, so I've been joking on Twitter the last couple of days, half joking. I haven't really been doing it myself, unfortunately. Hindsight is 2020. But man, ever since August 5th, what are we calling that, by the way? We calling that the yen yo-yo? I kind of like that. Ever since August 5th, if you're an options trader like me, the game plan should have been wake up, sell premium. That's it. Wake up, sell premium. I didn't do that necessarily, and I regret that. But man, the way the VIX has just gotten pummeled consistently, with the exception of like the last 2 days, we ticked up a little bit. But I mean, man, I've seen a lot of VIX spikes and mean reversions in my day, but this one from August 5th really might take the cake for me.
Well, mathematically it does. You've never seen anything like that.
I just don't think I've seen it that quickly.
I know for a fact you haven't.
Yeah. Okay.
Yeah.
There you go. Thank you for
we have the
confirming
data,
my
and I know how
suspicions.
old you are, so you haven't seen it. So
Right. Pretty amazing. And shout out to you. I hate giving you shout outs, JC, but in a coincidence of timing, you happened to appear on Josh Brown's show, The Compound and Friends, the day all that stuff was going down, or right around the time that was going down. And all of you guys in the room, while this was still yet to be determined, I kudos to all of you guys in the room for saying, this is bullshit. Why are we all freaking out? And I mean, you guys nailed it. So congrats.
yeah, but we cheated because we looked at the data. So
That's not cheating. That's your edge.
is
what
that
makes
the
you
edge by
special.
actually looking instead of like reading gossip columns about like third parties trying to make up reasons for why things are happening? Actually looking at the data can be helpful. Like imagine that. Imagine.
Yeah, no. If people would have watched that show the day you guys recorded, or the couple days after, I think most people would have had cooler heads and probably would have come out of this pretty well. In fact, I had a conversation with a trader last night, trader I know, and she's very frustrated, and she represents a lot of people, I think, over the last couple of weeks who've just gotten chopped up. And I think part of it is because we saw that vol spike, it got all the bears excited for a brief period of time, and now a lot of traders are a little, jittery or whatever. They're all waiting for the next shoe to drop. And looks like that next shoe ain't coming anytime soon. But a lot of people have been trying to front run that trade, trying to front run that rollover, and they're getting frustrated to no end. And the trader I spoke to last night is just a perfect example of that. She's just like, can't do anything right. And I'm like, well, what are you doing? She's like, well, I'm not seeing any follow through on the downside. Well, maybe that's the problem. You're looking for the downside. Look at what the market's telling you. The market's telling you the path of least resistance is higher. The pain trade is higher. I talked about yesterday. It's been tough for people who are fighting the trend in the last 2 weeks. That's for sure.
Fighting trends is generally tough. Like I feel like if you're gonna fight a trend, you better have a good reason. Like you better have number one, you better have a really, really good reason for fighting the trend. Number two, your risk management procedures better be outlined, written down, tattooed. Like you better, right? So it's like those two things. Like it's okay to fight trends, but again, you don't want to make a habit of it. Like this isn't something that you want to do always. And you better have a good freaking reason, and you better have risk management nailed down.
And I know why people do it. I mean, if you catch a trend reversal, those can be very profitable trades, whether you catch a bounce going up or you catch the turn going down. If you catch that, it can be a very profitable trade. It's very attractive for people to try to make those trades. I get it. But what comes with trying to be one of those types of traders is you are going to have a high losing rate. And there's nothing wrong with having a high losing rate as long as you have good risk management. But you have to go in knowing that you're not going to nail it on the first try. It's probably going to take 2 or 3 or 4 swings at it before you actually catch that turn you're looking for. And it's not easy. And, when I lived in Chicago, I knew a bunch of floor traders, and floor traders just inherently are fading the moves, right? They always said, if you're not fading, you're not trading, right? They're buying it when the market's selling off, and they're selling it when the market's going up. But they're taking small losses along the way, and they're taking a lot of losses. But when they catch it, boom, it makes their day, makes their week.
Are you just in a let's look for call options naked in something showing relative strength? Like, is that where your head is at, or are you thinking a little bit?
Yeah, you and I talked about this yesterday. I feel like right now, with the major collapse in VIX that we've seen, I think the market is providing us with a good opportunity that if we want to position bullishly, which I'm leaning bullish still, even after this big run, I'm leaning bullish, but I'm also mindful of the fact that we are 1 or 2 headlines away from, a major reversal. Again, I'm not one of those bears who's looking for the turn and trying to get short, but I'm mindful that we could reverse on just one crazy headline out of nowhere. So that being the case, I'm bullish and I want to position bullishly, but I want to do it with defined risk. And I think with volatility being so cheap as it is right now, the options market is saying, hey, if you want to position bullishly, great. Just buy calls. It's relatively affordable. Your risk is defined. You're not going to get crushed if the market rolls over here. So for me, I'm looking for those types of trades right now. bullish bets to find risk. However, JC, you and I kind of talked about this a little bit yesterday. This is also a good time if you are one of those people who are sitting on a lot of long positions right now, a lot of long exposure. This also could be a very good time right now to start purchasing a little portfolio insurance that for that hurricane that might come, maybe buying some out of the money puts in the indexes right now, right here.
Yeah.
You know, hopefully you lose on them, right? That's the funny thing about insurance, right? You actually hope that you lose on those trades, right? But if they pay off for you, you're going to be very happy that you had them in the case of any further market turmoil. So
insurance is at a massive discount versus 2 weeks ago when people were buying insurance.
Absolutely. If you woke up on August 5th looking to buy puts, well, you know, you got your face ripped off, and you got your face ripped off by me because I was selling them to you, and it was a great trade.
I told you last night, Sean, I want you out there looking for delta neutral. Have you been following my instructions?
Well, this is part of that discussion. I think the delta neutral bet, the way to do it is not to look for delta neutral trades. It's to get delta neutral through purchasing index puts for your portfolio.
Yeah. That's what I've been doing. I love that.
Yeah, I don't like that. I like a more delta neutral position.
I'm with you, Sean. There's some beautiful trader wisdom here. I just wanted to comment on the spooky comment you made about being potentially one headline away from another day like the yen yo-yo. Howell.
Yo-yo.
Yes, the yen yo-yo is taking hold. I like it.
Hashtag yen yo-yo.
It's good.
Stop it. Guys, this is important. The J-Pal speaking live from Jackson's Hole tomorrow.
Ooh.
Let me tell you something. I've done a lot of
I
studying.
think it's at 10 a.m. Eastern time, I think.
I'm glad you brought that up,
I've
Strazza,
done the
because
research.
you just reminded me. We've seen some Jackson Hole shenanigans in late August in years past. So thanks for the reminder.
There's the old elk to economist ratio that I encourage everyone to look up. The enjoyment and satisfaction from Jackson Hole varies dramatically when this elk to economist ratio gets to levels that we're currently seeing. So you want to avoid Jackson Hole when that ratio is near current levels. And then once it mean reverts, because it always does, that's when you want to go. So you want elevated levels of elk to economist ratios to visit Wyoming.
Yeah, if you want to see some elk, just come visit me. I got them right out here at my window.
Colorado's great, but we're talking about Wyoming, right? Also great.
Do you have moose?
We don't have moose coming through my neighborhood, but I see moose pretty regularly when I head up the mountain. Sure.
Big, right?
You see moose regularly?
Yeah. You guys remember I went on that camping trip about 3 weeks ago. We had a big old moose come right through our campsite. It was pretty cool.
Wandering around.
Just wandering around. Yeah, they're big. They're big.
Yeah, they are. They're humongous.
I had a close encounter with a moose / elk near the rim of the Grand Canyon once in the middle of the night. It was.
Did it try to push you over?
It was scary, terrifying. It was just me and the moose. It was dark.
That sounds like a great short story.
We were in Salt Lake, and the moose was just there, right in the middle of town. And
It's a great T-shirt. Me and the moose. Me and the moose.
As
How
far
come
as
we don't eat moose, but we eat elk? What's the difference?
I don't think the meat is tasty, is what I've heard.
What's the difference between a moose and an elk?
I don't think the elk meat's good either, though. It's gross.
You get it in mountain towns. Like it's
Oh,
like
I know.
lean.
Yeah, I know.
Yeah, elk burgers are a thing around here, and I think they're overrated. They're fine, but they're not worth it. I'd
It's
rather
more
just
of the
get a regular
novelty
burger.
than anything else.
Yeah.
Yeah, it's lean. Just give me a ribeye and call it a day. Give me the cow.
I'd rather have a Wagyu beef burger. That sounds better.
I'll have Wagyu anything. Yeah. All right, Spencer, hit it. Let's go.
I got nothing. Come back to me.
We are 9 days away from a murdering.
From a
It's gonna
what?
be taking-
Season?
That's
Football?
going to be taking place in Gainesville, Florida. A
Oh.
place that you never want to go to Gainesville, Florida. Whatever you do, don't avoid it
Especially
at
if
all
you're a
costs.
Miami
Terrible
Hurricanes
place.
player. You definitely don't want to go to Gainesville.
Gainesville, terrible place, terrible people, just bad football teams. Like it's just not a place to go.
This is like the start to this football season is like the perfect storm for Sean and JC. We got Miami, Buffalo week 2, and then we got Hurricanes, Gators week 2 college football. That's like what a great start for us, JC. This is great.
Is that technically week 2 because there's like some like no name like Akron against like Eastern Carolina State or something this weekend? Or
Florida State, Georgia Tech kickoff this weekend in
Dublin.
Ireland.
In Dublin.
Yeah.
That's pretty cool that they're doing that, by the way. It is really cool.
Yeah.
Tallahassee, Florida, also a place to never go to.
By the way, I'm looking at. Shout out to any Michigan people out there. I might be going to a Michigan football game in the Big House in early November, so I'm pretty excited about that.
That's going to be
Have
fun.
you ever been?
Oh yeah, I've been there many times. Yeah.
Oh, I've never been. I'm dying to go.
Back when I lived in Chicago, it was just a 4-hour drive to the Big House. So I went to a few games over there.
That's true.
All right, I have a recess. And it's really just a question.
Yeah.
So, quick story. Preface the question. My wife is on Bumble BFF. Do you guys know what that is?
Bumble? Your wife's on Bumble?
Bumble BFF.
Uh-oh.
It's like dating app, but to find friends.
Oh.
Okay.
Wait.
Okay.
It's an app for finding friends.
Yeah.
Yes.
These are things. These are
This
getting
is the
popular.
thing.
Go.
She's been on it for like 3 days. I kid you not. Anyway, last night she shows me this, and so it's like a dating profile. You have pictures, you have prompts. It's like any dating profile, right? She shows me this person that she sees on the app last night. My question to you, and I apologize, it's a little bit fuzzy because I had to zoom in. Is this a green flag or a red flag? I feel most empowered when I double my profits in an open option position in a day.
Wow. These
must be
algorithms are like legit.
She must be a breakout multiplier subscriber.
I was gonna
Green flag
say,
or red
man,
flag? I'm undecided.
Dude, this
Well,
AI
hey,
is no joke.
This could have gone the other way. I thought Spencer was just to announce he was about to get divorced. So this is good news, I guess.
All right. So this is good. Are you sure that this isn't a swingers app?
Yes, I'm sure.
I think he's secretly hoping.
I mean, I don't know.
You got to buy a whole new wardrobe with pineapples on your shirt and shit.
No, in all seriousness, people do this. I have a friend who herself has made friends on this app.
No, I know they do. We're just giving you a hard time because that's hilarious.
Oh, but I saw this, and first off, she asked me to explain. She was like, "Can you explain this to me?" And I was like, "I don't know if I really want to, but I don't know if this is like a red flag or it's a green flag. I'm still not sure."
This is a customer of our Breakout Multiplier product, and this is part of the strategy.
Could be. It could be. Anyway, this happened last night, so thought it was funny. All right, that's what I got.
So speaking of places to or not to go in the great state of Florida, my girlfriend and I will be exploring parts unknown to us this weekend. We're going to Marco Island, going to explore the area around Naples, just kind of check it out. I've never been to the west coast of Florida. I've been to like Tampa, and that's it. But like never stayed there, driven through it, never been there.
Well,
West Coast of Florida, you'll be the youngest person there.
Just to say, you'll get a good nap while you're there. It's
you'll be about a third of the age of everybody else.
Yeah, but you say that, but I'm the youngest person on the east coast of Florida in most of those towns too. So I like Florida. Where am I supposed to go?
I'll tell you what. Go watch the sunsets. You get beautiful sunsets.
Yeah.
Because it's on the west coast, right? Also, the turtles kind of come up and they lay their eggs, and then like the turtle people come and like surround it with like a little fence so that you don't step on the turtle eggs.
I used to do that.
Oh wow.
Here. Yeah.
Well, that's cool. So I like that, and then that's it. Try not to eat the food.
JC hates this when I say this, but I did live on the west coast of Florida for a while, and I think the west coast is the best coast. And you'll like the water there. Great swimming in the west coast. The water's warm. The beaches are nice.
Are beautiful. Yeah.
I've heard just so many amazing things over the years. It's crazy that I've never gotten out there. It's going to be like a 4-hour drive for us, maybe. So excited.
I lived there for like 3 months. I lived on the West Coast. I lived in Fort Myers. So I was training with the Twins.
No kidding. I didn't know that. Wow.
Back in the day. But all we did was work out and like play baseball. So I didn't have much fun. And I was young. I was a kid.
They got some beautiful golf courses out there too, I'm noticing.
Well, people have a lot of time on their hands over there, you know?
All right. let's wrap it up. It's Thursday. We got a lot going on today, actually. We got the jam session at noon. We got Chart Request Live. Probably be at like 1:15 today because we got some other stuff for Hot Corner and Breakout Multiplier in between those things. So a lot going on. Busy day. We'll see you guys later. Smash the like. Thanks, Callie Cox. Thanks, Sean. Thanks, guys in the chat. We'll make some money, all right?
I have a tennis lesson now.
Keep an eye on Jackson.
Whoa, aren't you fancy?
Pretty fancy with my tennis.
I can't take no loss. I don't even know what it costs.